Dominic Strauss-Kahn is in Nairobi today. Do you expect anything other than a green energy policy to come out of that, especially with Kenyan central bank reserve data slightly lower last week?
No, I think you're absolutely right. It's going to be a green energy story, and it's also going to be a rather constructive story about Africa as a whole. I think, estimations of a very sharp slump in African GDP were proven wrong, and actually the resilience and rebound is proving to people that there is tremendous resilience underneath us at the moment.
And talking about resilience, the NSE 20 up again, really on the back of institutional investors. Is this a signal that there is greater confidence in the Kenyan market?
Well, I think you'll find the NSEs at a 15-month high. We had that political buffeting 2 weeks ago. We're more than 150 points higher since then. It seems to me that all the news is in the bourse, and actually it looks set fair for about another 10% gain in reasonably quick order.
And top of those gainers on Friday were the agricultural stocks. There was a bit of mixed data that I had this morning, but from the NSE, Kakuzi was up 23%, Williamson Tea up 31%. What is really driving these agricultural stocks? I know that they are a favorite of yours.
Absolutely. For the most part, they're at 4.5-year highs. Kakuzi's returned about 228% over the last 12 months. George Williamson about 272%. And you see this right across the asset class. And I think what you've got is ultra low PEs and ultra high breakup values. And finally, investors have worked this out. It's taken them a very long time, but you're now seeing a bit of a feeding frenzy with these counters. I still think they remain very cheap on all metrics.
How high can they go, and how long can this rally last?
Well, let's look at Kakuzi. It trades on a price-earnings ratio of 4.5. Indian tea companies are no less than 25 on a price-earnings ratio. I don't think it's unfair to think that a P of 10 is a shoo-in. That means we've still got another 100% of upside in the price, and this is pretty much replicated across these counters. They were a very forgotten corner. People have woken up to them, and it's a little bit of a charge right now, but I still think there's plenty of headroom.
I want to also just focus on the bond market. Last week, it doubled to 16 billion Kenyan shillings, up from 8.8 billion the previous week. But there was a newspaper report out this morning saying that it could spike conflict this could spike conflict between banks and stockbrokers. Is there a big issue? What's really the story there?
Well, first of all, there's been a lot of juice in the bond market in Kenya. It sort of inflected about 12 months ago. The government was able to unload debt that they had not been able to unload previously. They're even now talking about a 25-year bond, which is what I would call a really coming of age for the Kenyan capital markets. So there's plenty of activity, there's plenty of brokerage commission, and I think you're seeing the brokers going head-to-head with the commercial banks, who are the biggest natural buyers of these bonds. The commercial banks are not keen, I think, on having too much transparency in the price in the market. I think they have a much wider bid-offer spreads without the transparency. So you've got this tussle going on, and I'm not sure which way it will conclude at the moment. But the expertise lies with the commercial banks when it comes to the bond market.